Hello, Doug.
Hi, Sean.
So today you wanted to talk about?
I want to talk about what happens when you are buying a house and you are getting a mortgage.
Okay.
And the mortgage company has an appraisal done, and the appraisal comes in lower than what your purchase agreement is on the house you want to buy.
Okay.
Okay, so this is a true story. A client of ours was really happy to get a house on the contract. It happened to be a foreclosure, which is also called an REO, or a bank-owned property.
Bank-owned, okay.
And there were multiple offers.
Okay.
And she really wanted the house because it was the house for her, and it was close to where her parents live.
Okay.
So she got the highest bid or offer on the property, and the bank took it. And then, of course, her mortgage company then, as part of the mortgage approval process, ordered the appraisal. The appraisal came in $6,000 low from what she paid for the house.
Which is a bad thing.
Right, because the bank will only loan you money based on your sales price or the appraised value, whichever is lower.
Right.
So if you're putting, let's say, 10% down, they're going to base your mortgage amount not on 10% down based on what you paid for it, but the lower amount. So basically, that's going to be $6,000 more cash she needs to bring to closing in order to buy the house, if that's what she wants.
You have to make up the difference in cash if you want to still buy the
Well,
property.
her question, though, was,
Okay.
oh, because it's a bank-owned property, the bank should just lower the price.
Okay.
And
The bank that owns the property.
The bank that owns the property that is now considered the seller. And her question was, will they do that? And my answer to her was, yes and no, maybe. It depends on what was written in her purchase agreement for any type of contingency clause regarding financing.
Okay.
So,
Which a lot of people don't think about, the financing addendum of a purchase agreement.
right, the financing addendum of a purchase agreement kind of controls what will happen in this type of situation. It doesn't matter that the bank was the seller and the owner of the property. It could be just with a regular seller. So in this case, it said that she needed to get financing, approvable financing, and that the property had to appraise out at the sales price. Otherwise, the contract was null and void, canceled, all earnest money returned to the buyer.
Okay.
Now, she really wanted the house.
Okay.
And so the question was, well, because that clause was in there, does the bank have the right to cancel the deal and maybe go to the next buyer? Right?
And what was the answer you came up with?
Well, the answer was, she said, the appraisal is low, that's okay, I've got the funds in my savings account to come up with I really want this house, in other words, is the question. But some people would say, hey, I don't have the money, sorry, I can't buy it because I don't have that extra money. Right. So then what we would try to do is go back to the seller and say, would you consider lowering your price to the appraised value so then I can still buy it? Because
did the seller, the banks, did they do that?
We tried that. The bank, of course, said, no, I have other people that are interested in the property. You just happen to be one out of three that we're offering on this property. I'll go to the next one. So that's why she decided, hey, I better stay with this and dig into my reserves and come up with a higher down payment.
Okay, so she did that.
She did that. She got the house. Just happened to have a lower mortgage amount than what she was planning on. She was okay with the price.
But she probably still got a really good deal.
Yeah, she
just
probably
for whatever reason that appraiser came in with a little more.
we tried to challenge the appraisal, and it's really hard to do that in these days and times with the mortgage companies. They're pretty careful and very conservative on their appraisals.
Pretty gun shy.
Yeah.
Okay.
That's what happened in this case. So.
Okay.
We were able to get her the house, but in the long run, she has a lower balance on her mortgage, so it'll be paid off sooner.
And that's kind of what you, as an agent, you helped her kind of navigate through.
Yeah, it was a little complicated, especially when this was her first house, so it was a little bit different than normal. She didn't know what to do.
Well, hopefully some learning points there for somebody else, and hopefully your team can help them in the future.
Great.
Okay, thanks, Doug.
Okay, bye-bye.
Bye.